I want you to imagine this. You got a car, but there is no fuel in it, so it's basically useless. It won't get you nowhere, so imagine entering a trade that has no fuel. And that is why liquidity is the core of trading, because it is the fuel of the markets. So what I will do today is make you understand exactly when market collects all the liquidity or fuel, so you can always trade with the market and not against it. So let's get started. But just before we start with the liquidity part, I want to show you the profits I made last month. So if I made these profits, you can make them too, trust me. But without too much yapping, let's just get into the video. So the first thing I'm gonna do is I'm going to explain liquidity from absolute zero, so everybody can understand it, and you just need this video to understand all of liquidity. Okay, so let's start by this. We have some kind of structure in front of us like this, and what does this even mean to us, and why is this important to us to understand liquidity? So the first thing we can point out is that we have highs and lows, and some of you may know that highs and lows are liquidity, but why and how? So let's have a mindset of a normal day trader that doesn't know too much. So if he sees that the market is making pushes to the upside and little pullbacks to the downside, what is he gonna think? He's just gonna think that market is going to go to the upside, I'm just going to enter longs and I'm going to make money, and that's fairly simple. But if it only worked like that, so the point is, if he, let's say, enters a trade, I don't know, right here on a pullback, because he's expecting some kind of reaction from here and of course just a continuation to the upside, and is that going to happen or not? And trust me, 95% of the time that is just not gonna happen like that. Why? Because 95% of people in the market are going to think this way, that they can just enter off of these pullbacks and target new highs, but not everybody in the market can make money just like that. So we always need to see some kind of manipulations, and what these manipulations are: liquidity. And why do I say that? Because if a lot of people are going to enter on this pullback right here, tell me, where are they going to place their stop losses? So their orders are going to look, let's say, entry right here, because they are expecting move to the upside. Their stop loss is always going to be on the most recent high or low like this. So basically they are just going to put their stop losses right below the low like this, maybe not exactly on the low, but maybe something like this, just right below, and they are going to target, let's say, this high up here. And what's gonna happen? 95% of the time market is gonna do this, and trust me, I know this happened to you tons of times. Market did this, swept your stop loss like this, and what market did next? He continued going to the upside. And what is even worse is that on this move right here, a lot of people think that this was some kind of break of structure. I cannot really write right here, but this was break of structure like this, and they're expecting moves to the downside. So what different side of people are going to do is they are going to enter shorts from here with the stop losses above here, and everybody is just going to lose money in the circle. And it is just so sad that people don't understand it. But if anybody understood this, how could everybody make money in the market? So that just wouldn't work. So now that we understand what is basically liquidity, that liquidity is stop losses at lows and highs, we can go on and master liquidity, which is basically comparing liquidity with the time that liquidity happened, and different kinds of liquidity that can literally make you have some kind of a wall hack in the trading view. I don't know how to explain it better. Okay, so now when you know what liquidity is, I'm going to explain you some kind of example on the chart. So on the chart right now, everything seems normal, like you can see a swept liquidity right here. And now you may ask, what is market going to do next? Like, it is probably going to go to the downside because we just swept this liquidity right here, but which liquidity is it going to take? Like, we have 1, 2 and 3 liquidities right here. Like, how can we know which liquidity is the liquidity that we want to take? And this is the first little advanced thing that we are going to learn in today's video, and that is going to be the time of liquidity. So if you turn on this indicator, trust me, it's not going to be some kind of buy or sell indicator. It's a logical indicator that is going to show us session liquidity. So it is called IC real zones and pivots, and once you turn it on like this, it is going to show you basically session times. So session liquidity is one of the most important liquidities in the market, like, because we are going to look at it every single day, and it is just going to be a great powerful liquidity. So with this simple indicator, what can we see on the chart? That this is not a session low, this is not a session low, but this is a session low. So what can we expect basically right now to happen? If we were to target, let's say, some low, if we were in the sell position like this, and let's say targeting lows, we don't have to target this low low or this low, because we can be sure that this low is gonna hit because it is an important low. And let's just now see if that actually happens. So we spike to the downside, and yep, in the end we just spiked and took all the liquidity from the London session. And later in the video I'm going to show you exactly how we can use all of this to our advantage to catch moves from here to here, then from here to again to the upside, so we can literally play ping pong with the market. And now also one very important thing that you guys need to understand is how can we basically make difference between break of structure and some kind of liquidity sweep. So on this chart example right here, I'm going to turn off the indicator. We can mark out these highs and lows that just happened, and let's see what happens. So we have all of these highs and lows, and right here first you can see that this right here high only got swept. So liquidity basically just spiked and came back to the downside and closed the candle right here. So we did not close above with some kind of volume. So this blue candle right here wasn't like this going to the upside, and with the wick like this, that is showing indication that market wants to go to the upside, but it just spiked to the upside, took this liquidity and went back to the downside. Same goes here. You can see this slowdown here. It just got swept. We did not close below it. Market did not show any indication that it actually wants to progress to the downside, but we just swept liquidity and bounced back up. So that is a nice indication that market wants to reverse. But let's right now see what happened with this high up here. So you can see first market swept it, and instantly after that market swept it one more time, but this time it closed above that liquidity. So that is a pretty good indication that market actually wants to go to the upside. So if we fast forward the market, let's see what happens. So market made just a little pullback. That was really a bait for everybody who thought that market is going to go to the downside, and they were probably targeting this with their stop losses above here. And you can see that the market just straight spiked to the upside and probably took all the stop losses right here and just progressed moving to the upside. And trust me, I totally get you that this may be really complicated right now when I throw it all out like this, but right now I'm gonna make it all simple. If we want to trade to the upside, we first need to see some kind of manipulation towards the downside like this one right here. And if we want to trade towards the downside, so if you want to take shorts, we want to see some kind of manipulation like this one. And it is that simple. So if we want to target something to the upside like this, we always need to see a liquidation to another side, to the different side like this, taking some kind of liquidity, because then we know we are with the market, with the fuel, and we are going to go into the right direction. So always, if we want to trade one direction, we first need to see manipulation towards the other direction, because then we are sure that we are trading with the actual banks and huge institutions. And why is this indicator important about London highs and also other session highs and lows? Of course, London is most important session because the most amount of money is moved in the London session. Basically, there is always going to be a ton of stop losses here and here, and just a ton of orders. It doesn't need to be specifically stop losses, but a ton of orders, and market is always going to try to collect them, and basically it's always going to manipulate it. You can see right here Asia low was swept like this, and then after that we progressed to the upside. We broke above the upside, took all the stop losses. We just basically took stop losses up and down, and that's how the market is always going to move. But you can see always the London high and low are going to be the cleanest, the most nice representation of liquidity sweeps and basically how it functions in the market. You can just see beautiful examples right here. Alright, so before I continue and basically confuse you even more in the markets and in everything. Alright, so before I continue and basically confuse you with all the different liquidities there are in the market, I'm going to answer some of questions that I basically got asked the most. So the first one that I already answered, but I want to repeat it because it is so important. When is the break of structure and when is liquidity sweep? Like how to recognize when it happens in the market. So it's all up to the volume. When you see a liquidity sweep, you are always going to see some kind of rejection, so a wick to the upside and a wick down, and basically then we are going to reverse. But when actually some kind of break of structure happens, when we want to go to that side, you are just going to be pure volume like towards it and through the liquidity, and we are just going to continue without stopping, and that's when you stop like looking for reversals. And the question that we need to repeat once again, out of millions of liquidity pools are basically highs and lows, so areas with liquidity, which one is the exact one that will make a reaction and be significant. So we always look if there is some liquidity pool that is basically from London, New York or Asia session, and we are always just going to be looking that those are the liquidities that we are targeting or that we are waiting for the basically setup for the reversal, or if we don't have them, we are just going to look for some kind of nice obvious highs and lows. Alright, so you guys now understand fairly good what is liquidity and that time of liquidity is very important. So right now we are going to learn two very important types of liquidity. So the first one is going to be low resistance liquidity, and the second one is going to be equal highs and lows. Alright, so I'm going to start with explaining what is low resistance liquidity. I'm going to turn this off and move it aside. And basically low resistance liquidity, as the name says, it is a low resistance. So when we have some kind of structure to the downside, so we are just making structure like this, and we have a lot of highs in the markets, let's say, that are untaking like this. So basically a lot of the times we can just mark them out with a line like this, and we mark them out like this because it is a lot of the time going to look like some kind of trend line. And why is this awesome type of liquidity? Because when we spot it in the market and when we want to target it, because it is low resistance liquidity, so we have little bit of liquidity here, little bit of liquidity here, like this is all this line is full of liquidity, and it is all low resistance. So once we get the, let's say, potential sweep of something right here, sweep of some kind of important low, and we get a setup right down here, and what is going to happen? We are 99% of the time just going to shoot up like this because all of this is low resistance, and we are just going to take it within seconds. So we have this one right here, and we have one when we are just going to the upside like this, and it's basically the same thing, except this time we are just going to the upside, and what we do is we mark it like this. We can put this LR right here, and what happens after we sweep some kind of important level up here, what happens? We get a setup right here, and market just shoots down and takes all of this liquidity, which is basically low resistance liquidity. And trust me, I love this kind of liquidity because always we get setups that just play out within seconds. Okay, now on to the equal highs and lows and why this liquidity is very important. So if we have some kind of high happen in the market, and then we went up and basically went to either sweep it or something, but market ended up just coming towards it, retesting the same level and going to the downside, what just happened? Basically all the stop losses that were just above this high did not get taken, and a lot of people saw the reaction from this and entered a trade, let's say right here. And where did they put their stop losses? Again right here on the same high. And what is going to happen? Basically we have two same highs right here that all both have stop losses. And what does that mean? That means that we have twice the liquidity right here on these highs. And what is that going to mean to us? That means to us that this level right here is basically a huge magnet in the market, and we are just going to want to take it as soon as possible like this. So what I would suggest mostly for the highs and lows is they are going to be probably a best target in the market, but we are not often going to get setups from it, but we still can. But the thing that I like to do the most is, let's say, sweep to the downside like this. If this was some kind of important low or just a nice looking low in the market, then a setup towards the upside right here and just targeting these highs is always going to work out. And then the absolute same thing goes for when we are basically making structure to the downside. When we get equal lows like this right here, basically same thing is gonna go around. We are going to wait for some kind of setups towards those lows because they are going to be huge draw on liquidity, because twice the liquidity than a normal low. Okay, so right now what we can see on the actual chart, like this is real market right now, you can see that we have London high right here, and the thing we can spot is that we are quite nicely building the low resistance liquidity. So you can basically see how the market is respecting this trend line towards the upside. We can mark it like this, low resistance liquidity, and basically what we are waiting at, or what we could wait in this situation, is some kind of a London high sweep, then a target of whole low resistance liquidity down here. So let's see if it actually happens in the market. So we are going to the upside, and literally after the sweep, market spiked to the downside. This was actually session open. But if you guys want to see how I actually trade, how I execute a trade, I'm gonna pop some different different videos up there so you can check them out, because in this video we are purely focused on liquidity. I'm not going to show you how to execute, how I enter the market, which confluences I need alongside with liquidity, and I'm just going to show you what is liquidity, how to spot it, which liquidity is the best. So this is basically how the low resistance liquidity functions. As I told you guys, we are always going to see huge momentums off of the low resistance liquidity. Of course, this is also the fire of the New York Open session. So this right here was the New York Open, and you can just see how respectfully it took all their low resistance liquidity and basically would have made us a ton of money. So if you guys are interested how I entered the trade, execute them, you can go to another video up there and check it out. And right now I'm gonna drop you even more sauce on basically how to spot the eagle highs and lows. So you can see that we have a London indicator and basically session indicator turned on, so I'm gonna turn it off, and we have this eagle high and low indicator that you can also turn on, and it is going to show you basically eagle highs and lows like this one in the market right now. So you can see that basically eagle high is the same as London high, so this is going to be a huge liquidity that needs to be taken, and let's just wait to see what happens. Do we actually sweep the liquidity? So you can see we swept London high and eagle highs right here, and what do we expect? We expect a reversal towards, let's say, London low, and let's see, are we going to get that? As you can see that we beautifully got it. So if we only just enter the market up here that I actually show in all other videos except this one, because I'm only focused on liquidity, we would make huge profits. So I just want to show you that liquidity actually drives the market. So guys, if you enjoyed the video, you can leave a like and subscribe. That means a lot, because then I know I'm doing something right. And also, before you leave the video, here is something for completely free since you watched the video till the end. It is going to be my whole strategy playbook, which you can literally claim by clicking down there on a link, and it is completely free. Like, you don't need to pay me anything for that. I just want to give back to community because you guys are supporting me every single day. And there is also a link down there if you're interested to get to work one-on-one with me. You can basically go through that link and just see if you're a right fit, because the spots for that mentorship are very limited, because I cannot work with everybody one-on-one. So I want to thank you again for watching all the way till the end, and trust me, if you want to see more content like this, all you need to do is subscribe. It's completely free, and like the video, so it just lets me know that I did a great job. And I'm gonna just see you in the next video, guys. Peace.